Audio issues, day number 3. Day number 3. That's Penny. Looking right. Hey, welcome to the Closing Beat, everybody. Happy Wednesday. How you doing out there? Let's just arrange this a little bit. Get comfortable. I need the best angle I can get. You know what I mean? I'll take anything. It's got to be right, here. This side's bad. This side's good. Hey, anyways, welcome to the Closing Beat. We are financial advisors here at Jazz Wealth. That's what the shirt says. So you know it's true. Check us out at jazzwealth.com, or interestingly enough, if you can figure it out, dostraight.com. It'll link you to the same thing. We had intentions of doing something different there. We may still will, but we're working on our app now, actually, so everybody can get on their phone and do their thing there. Speaking of working, Eric's going to be working tomorrow. Wine and Wealth. Thursday night is going to be talking about, Eric's going to talk about beneficiaries, legacy planning, and things that you can do because we deal with things like that every day where something happens to somebody and there's an easy way to go about it. And then there's the, oh crap, I never set myself up and did things that take 5 minutes to get things done. And now there's a big problem. So we'll be covering that one there. Also, our fin tips for the month of August will be focused on the person who is near or in retirement because all of September here at Jazz Wealth, our Wine and Wealth and other classes are going to be focused on the geeky stuff to show you how you can make the most out of the dollars you have. And it doesn't always or even often have to do with your investments. So we're going to go through that geeky stuff there with you in September. The goal is hopefully we share some information with you. You join us at Jazz Wealth. We get some stuff transferred over. You're ready for our classes in September. That's our marketing plan. That's as transparent as you could be there. So hope you check us out and feel free to schedule a call if you'd like to talk a little bit more and make sure we're actually here doing work and not always out of the office there. Yeah, the title of the video today I kind of put as, earnings and oil prices, interest rates, no World War III because of Pelosi visiting over there. Really a lot of good news for the markets to move higher. And there's a couple interesting things that are going on, so we have a chance to talk about that today, and I want to point things out to you. As I'll keep saying, August, we know, is not the month to force an investment. It's not the month to go out there and put large sums of money all in the stock market all at one time. It is the time to maybe start a little less aggressive and then scale into things that are more aggressive or just hang on tight and wait for the month to pass. It is known as the dog days of summer, and we are officially... We're officially seeing that, the volume dropping. It's very consistently moving lower, even though the stock market's moving higher. That's totally fine. And so you notice that boringness of the market. Look at today, for example. The stock here, can we do let's do just this one here. Let me see if I can go. We'll use the SPY. So we're seeing intraday data. And I'm going to come over, we'll change the time frame to 5 minute. Why not? And so here's what you're seeing. It's a little bit sloppy, but if we look at just today's performance, stock market opens up, morning volatility from the orders going in. Here's 9:30 going into the first hour of the day. Then what happens? Slow power trend day. A lot of people call this a power trend day because the market refuses to do anything other than trend higher, and that's okay. Then you have your end of day volatility. So the action, which is normally, this is the case. You normally see the stock market behaving a little bit more volatile in the morning. People place their orders overnight and kind of get their things done so they can go to work or whatever. And then there's this quiet time from about 11:15. 11:15 is known as the stock market reversal time. You can study it. It's rather interesting. All the way to 3:30. When you get to 3:30, volume picks up again. You can see it down here. Oh, you can't quite see it. You can see it a little bit. But volume picks up, takes you to the end of the day. That's 3:30. That is known as the 3:30 reversal time. So there's a lot of different points to look at in the market. But the point that I'm trying to make at the moment is otherwise, we're without the first part of the day and the last part of the day. You got a pretty boring market where people just have a chance to look around and say, well, I don't want to fight the trend. Maybe I shouldn't be tinkering with that. Now, the Fed has moved back to their comments that, hey, we're nowhere near almost done. That was actually one of the Fed president's comments there. We're nowhere near almost done raising rates. So this came out yesterday, actually. But they talked about doing 0.75% total as far as interest rates, raising them 0.75% again. Doing that for a third time in a row would be a record and maybe necessary is what they're saying. They said we want to get our policy a little restrictive expeditiously. They're trying to slow money, right? And it's working. They're trying to slow the turnover of the dollar that you get to put in your hand there. Now, what's interesting about that is it sounds like it should be bad news, right? If the Fed is trying to slow the economy, that will hurt growth of companies, which drives the stock market. So it sounds like it should be bad news, but the stock market don't care. It's like the honey badger. It really couldn't care less. So why isn't the market moving lower? Sure, you got the bond market wiggling around like all heck there, but why isn't the stock market moving lower? That's a good sign for the bulls, right? That's a good sign that we have seen the Fed saying we may need to raise rates more than usual, and all of a sudden the big growth stocks get hit, your utility stocks, real estate stocks, interest rate sensitive stocks start to move lower. The fact that it's not, you have to give that as a little bit of a pass there, right? A little bit of a thumbs up for the stock market, the resiliency of the bulls there. Now, today, you had the Fed president, Mary Daly is her name. I believe her first name is Mary, but Daly is often what they call her there. She said, hey, 0.5% rate hike. That actually may just do the trick if inflation isn't roaring ahead. So the stock market says, woohoo, okay. A lot of tough talk yesterday, loosening up a little bit today with their comments there. And they said there's not going to be a recession. We're going to just plow ahead with our interest rate hikes, but maybe a little bit slower there. So interesting for that. You get confirmation of this on Friday, by the way. On Friday, the CPI numbers will come out, and you'll have your confirmation of how aggressive the Fed will want to be. That's not, I don't believe that's the last CPI number they'll get before the next rate hike, but it's certainly one that everybody's going to pay attention to. Remember, in our notes from Jazz, the email I send out every weekend, this last weekend, I did a breakdown of CPI being affected by energy. Well, we know that's pulling back. Well, everybody's going to look at core CPI. I love to point these things out to you guys because there's always a pattern, right? With earnings, great example. I'll cover that in a little bit. Earnings has a theme each earnings cycle. Everybody puts their attention over here. And so what if the rest of your company reported great? Over here, they're looking, right? There's a theme of, in this case, profit margin growth is what we were looking for. So in terms of the inflation number, we're going to be looking at core CPI. Everybody's going to look at that. We all know energy prices have come down, so everybody wants to see core CPI. What drives core CPI? If energy drives the regular CPI number, what drives the core CPI? In other words, what's the biggest weighted metric once you take out energy and food? So I covered that just to put a visual response to what you should be looking for. So it's not, catching you off guard, right? Anyways, let's move on here. We got Nancy Pelosi returning back from China, of course, so no big issues there. A lot of huff and puff out of China, but I don't know that we've seen the end of it. But otherwise, basically everything is back to normal there for the moment. We've got earnings today. Came in mostly good for the larger stocks out there, larger market cap stocks, but some of the smaller ones didn't do too well. Didn't matter. It didn't move the market. You have oil prices lower. Actually, we'll go take a look at that now. You got oil prices down another 3.5% on the day, clearly below the 200-day moving average at the moment. You got interest rates moving lower after starting higher, right? So prices moving higher, interest rates moving lower there. So that's a good sign there. Today in the S&P, like I already mentioned, every single little dip except for the end of the day, the last 30 minutes there, was bought up immediately. Right? There was almost not even a multi-bar pullback, like on a 5-minute chart. You normally, day traders and sort of shorter term traders, the common thing we look for is multi-bar pullbacks into an uptrend. It's the easiest thing you can look for if you're a brand new trader. I used to teach kids actually how to look for, different interesting areas to buy the market. And we would say you need a multi-bar pullback. If you only get one, that's not enough. You need more information. Well, we didn't even see that today. 5-minute chart, it was like red up, right? And so that's another kind of a nice little thumbs up towards the bulls and their strength here today. I also think that today was the first time we saw a little bit of FOMO dough, right? Or fear of missing out. You put your money to work because you're like, I don't want to miss this bounce here. I'm going to have to just, do my thing and get in there and buy some. We see that. There was actually an advisor here somewhat locally that almost perfectly to the day got out of all of his clients' positions at the bottom of the market. Almost perfectly to the day. It was fascinating. It was kind of a story here in town. Anyways, maybe some FOMO on his behalf there. Would never do something like that. All right, so with the stock market, then, if we're looking around, you have a lot of good things going for you. So what happened today? You got names like Amazon. Let's go back over here, make sure this is right. Amazon participating and continuing to participate in everything. Your big cap stocks, large cap, mega cap stocks like Apple over the $1 trillion club there, adding almost another 4%. That one just won't seem to quit. That's good. Google trying to move outside of a range here, or I should say Alphabet trying to move out of a range. You notice that across the board. Semiconductors got the all clear, 2.4% gain on the day. That's very helpful because now you have the semiconductor saying maybe this Taiwan thing's not going to be as big of an issue as we thought, at least for now. And so those got the all clear to move higher. Looking around the market, I don't have my screen in front of me, but you got industrials higher. Let's try something real quick while I'm here, just so I have what I'm looking for. There's the industrials on your screen at the moment. Financials, do want to point that out. Financials moving higher as well, lagging behind a little bit. You got to admit that, lagging behind just a little bit. Not so interesting there, but otherwise, the market giving you a pretty broad rally. If you look at the NASDAQ, also, we talked about that halfway point yesterday. So today, breaking through that just a little bit. And I believe the Dow, nope, didn't quite do it. Nope, so just the NASDAQ breaking through the halfway point there. I will give a little shout out to the Russell, because that's been slacking a little bit, and today finally decided to start participating there. So that was good to see. One other thing I want to point out, of course, we've got oil. This is a bit of a slap in the face to the U.S. there, but it's apparently what the U.S. wants. OPEC Plus agrees to increase production by 100,000 barrels per day. There were economists, I think the Energy Secretary even said, that's a meaningless number. It's even a blip, not even a blip on the screen. Remember, Biden went over there fist bumping with the Saudi presidents and Saudi energy minister and everything like that to try to get them to produce more oil because we need that and we want to combat a little bit with Russia. And the Saudis said, yeah, we'll do it. We'll do 100,000 extra barrels. It's a joke, right? It's like 0.12% of the world's supply a day. And I'm not very far off on that. It might be 0.18 or something like that, but it's a very, very, very small amount. So OPEC's response was, you guys are over there saying you want to reduce your oil usage, right? You want to, work on clean energy and all that. So why should we produce more oil? They got a point. You know what I mean? They got a point. They're watching our news too. They see the same thing. Anyways, they also commented that chronic lack of investment will lead to supply issues in 2023 as demand remains high. That was their warning that, hey, you can't just go all EV everything you want to go. You need some oil. And unfortunately, if you're a climate change advocate there, it's right? You can't just walk away from oil. Someone will eventually figure that out. All right, I've got a lot of stocks in the news here today, so I do want to cover those with you because there's a lot going on. I'll try to make this a little bit more visually interesting because at the moment it is cut off, it appears. So let's go like this so you can see. All right, let's get with the first one here. Oh, first of all, Atlas Worldwide. This is a stock that we happen to own, and you can see, we've been watching, of course. We're enjoying the bounce. Now it trades almost to $100. It looks like, I forget who it was. Apollo, maybe? I think it was Apollo Global. Yeah, Apollo is looking to buy Atlas Worldwide. Very fascinating. So we're excited to see that. If you have a portfolio here with us at Jazz, you very, very likely have that in your portfolio. So good news there. No complaints. Yum Brands, before I get to the others, Yum Brands a little bit lower on the day. A lot of weakness in all brands except for Taco Bell. So what? What's going on there? We're all still eating Taco Bells, but everything else was weak for them. Airbnb almost finished the day positive on the day. Was a huge beat, 20% higher than expected earnings. So Wall Street analysts off by quite a bit there. That was before tax, so you could understand them. We could do a whole thing on that. But what's interesting, pricing beat by 1%, 1% more than we expected. Okay, that's interesting. Total volume down by 2%, but they still had a really nice beat. So what's happening there? It's the same stuff, a part of the same theme that I've been talking about since before this started, that you can have less sales, but if you jacked your prices up, you can make the difference. how many companies a day do I point this out? That's just a key of inflation, right? So you know what's going on there. Very, very fascinating. So that remains true for them as well. That's probably what helped them not lose as much as they thought today. They're buying back $2 billion in shares. That's about 3% of their market cap there. They're going to use this cash that they're making from higher prices to buy back that $2 billion in shares there. Analysts didn't like that. I was reading through a few analyst reports there. They said, well, how are you supposed to grow if you're going to be buying back all your shares? Now, you're going to grow the stock price, but the company's not going to grow. You're not going to scale if you spend $2 billion on all of that there. So that might have been the focus. I did not look too deep into it, but I'm going to bet that that's probably part of the focus there. AMD came out with earnings. Nothing interesting out of them, despite what we saw from the others, right? It's kind of NXPI and Intel and stuff. Just nothing really interesting there. Revenue beat a little bit if you're into that kind of stuff. So sales were a little bit better. They did guide for higher margins going forward there, but the issue is PC demand. Slowing PC demand is actually hurting the overall their demand numbers, and they break their demand numbers out. But it's just kind of unimpressive. I don't know. Speaking of unimpressive, you got EA Sports. These guys are sort of in a transition period, which is why you see the stock kind of blah. Not too much there, but slight miss on revenue, slight miss on earnings there. The problem with them is when they guide going forward, what we're looking for is new titles. They make video games. So we're looking for them to say, there's a new game coming out. The problem is last year, remember FIFA? They broke up with FIFA, so they can't make these soccer games anymore. So that's still hurting them. They're still trying to find their footing after all of that, because that was one of their big titles. So I don't know what to say about that. Today was great, but I don't know to say that's a buy. I just don't. The long-term view on that's a little bit tough. So I think they need a little bit of time to simmer and do their thing there. We'll come back to it. PayPal beats on earnings, beats on revenue. The real excitement came from management changes, right? So if you don't know, Elliott Management now owns, I forget how many shares. They're one of the biggest shareholders there. So PayPal's like, we don't like that. We'll buy back $15 billion worth of shares. That's what we'll do. That's 15% of their market cap, coincidentally, there. That keeps them in check. It dilutes them as being one of the largest shareholders. They'll still be a large shareholder, but PayPal now will just be have a little more beef in the game there. So they also did a new cost savings program. They did tease that last quarter. I think I remember talking about that. I want to say it was PayPal. If it wasn't, new cost savings program going on for them. They need that, and that's just another example of companies that are saying, we see the things are slowing down. We need to adjust a little bit. Speaking of adjust a little bit, you got Match.com. Earnings, 81% lower than expected, right? Did the math exactly just to see what it was, because I knew it was a big number. They missed big there. Revenue missed as well, so not really good. They lowered guidance across the board, across all their brands there. They do break out some of the fun stuff. The number of paying customers missed by 1%. The revenue per paying customer was down huge outside of the United States. This was a horrible report for Match. So old Cody's got to get on Tinder there again and actually be a paying member. Does it cost money to be on Tinder? It costs per swipe? If you want unlimited swipes. It reminds me of that Family Guy episode. Cody's just sitting there swiping like crazy. Anyways, so that's crazy. Camping World Stadium. Honorable mention here today. Camping World Holdings. They just happened to have a stadium over in Orlando. That's why I'm stuck in my head. They obviously enjoyed that COVID run-up. Everybody went and bought an RV and said, all right, if I can't be around people, I'm going to be around myself. I'm going to drive this RV wherever you drive RVs. I don't know. Growth slowed down a little bit for them, but revenue is still up 5.25% year over year. What? What does that mean? What does that mean? Growth down, just like I mentioned a second ago in Airbnb, just a little bit lower. Overall sales, much better than expected, way better than expected, which means your margins, just fine, right? So it's the same thing. Don't let these fundamentals scare you and make you feel like you got to trust somebody else to tell you, what the stock is doing. No, it's very simple. It's just like your home budget. It's just you have to learn to look at it as if you are running Camping World Holdings. Old Marcus Lemonis, if he's still around. You got to pretend like that's your personal budget. And when you look at that, you go, okay, cool. Dollars coming in were more, but my expenses were a little bit less. Actually, it would be backwards. It'd be different for them. Dollars coming in were just a little bit more. It was not quite, more, but, and then overall expenses for them down just a little bit relative to the dollars coming in. It's pretty cool. I don't know. I'm kind of fascinated by that. They also beat on earnings and all that good stuff. Okay, tomorrow you got earnings from Cigna, ConocoPhillips, Duke Energy, Johnson Controls, Kellogg's, Eli Lilly. The after-hours excitement will be Square or Block or whatever they call themselves now. And then, of course, you got Amgen as well. That'll be after hours. So if you're looking for something to do after hours tomorrow, those will be the two that likely get the focus. Yeah. Okay. So I covered everything I want to cover there. Remember, it's the dog days of summer. So I try to lead by example here. I'm not going to talk for 30 minutes and just go show you everything and make it seem like it's exciting, because it is time to just kind of, oh, look at Camping World doing their thing. Atlas Worldwide getting bought out. Well, that's good news. Things like that. Not saying is now the time to buy Apple. It just had this amazing run up and I don't want to miss it. You got to pull that back a little bit, right? You got to pull that back just a little bit. Get yourself in trouble now. Want you to get in trouble. What else do we got here? Let's see what questions you have. Happy to help you there and see what I can do for you. Oh, did I mention, where's Alibaba? They reported after the close, did they not? Or is that tomorrow? Was that not on my list? What's going on here? I'm not sure. I know that's coming up. I can just feel it here. That may be tomorrow. No, let's see here. Earnings for Alibaba. So, okay, we're talking about Hong Kong here, though. That comes out tomorrow. So they weren't on my list for some reason, but yeah. Anyways, so the question on Alibaba, I don't know what to say on that one because you got earnings coming up tomorrow. I wouldn't try to guess what's going to happen there. Yeah. Patrick's a little mad at EA, man. You messed up that Madden franchise. They haven't had a good run. You know what I mean? It's college football's back next July. They're bringing a game. Oh, so they had a college football game? Do the athletes make money? Oh, that's cool. Wow. Yeah, something's wrong, Pavin. I'm not getting any data for Alibaba. I just don't know. I know it's coming up. You know how you get that feeling? You follow a stock enough, you're like, it's about that time. So I apologize for that. I don't have anything I can share with you. You want to pile into Roku after the drop instead? Well, you're playing Monday morning quarterback there. Thank you. Yeah, it's too hard to go back and say, well, you could have, should have. If that was the case, I should have bought more Atlas Worldwide, right? Yeah. Yeah, Giovanni. I can't find the data because they delisted. They're gone. They're still there, but the problem is we have to wait for them to release it, which is not during our market hours. It'll be like 3 o'clock in the morning or something, or 1:30. So I don't see anything. You got Amazon. Well, Amazon had been lagging. So you basically had Amazon not wanting anything to do with the market. All of a sudden, earnings come out. What do you got? FOMO. Everybody that looks at Amazon, oh, I see it lagging. Why should I buy it? I should not buy it. What does it matter with this thing? Right? Now you got earnings coming out. You go, okay, cool. Oh, you're going to have another Prime Day? Okay, well, that was pretty good. Yeah, let's do that later in the year. Now people go, it's too late. I'm going to miss it. I got to get in. That's just what's happening with the stock market, too. Yeah. Yeah. About time for SoFi, huh, Justin? Yeah. You bought the short Qs yesterday. Not a big fan of those leveraged ETFs. I'll be honest. I hardly ever look at them. It's just not my thing there. But you saw a pullback. You said, man, I gotta be a part of that. I don't have anything to offer there. So I'm not sure. Patrick says, any good financial podcast recommendations, I think you mean. So me and Eric started something, actually. Our topic this week's going to be pretty interesting. It'll come out on Friday, but it'll also be posted on our YouTube channel as well. But we're going to talk about, and with the data, not just like those money guys that just say, well, that's dividend stocks, no, show me something. So we're going to talk about the actual impact. What I'm going to do is I'm going to create a random dividend portfolio. Then I'm going to create the world's best dividend portfolio if we had, psychic powers and we could see the performance. And we're going to compare that to someone who has a withdrawal strategy in retirement, right? And we're going to look at the volatility and stuff. So me and Eric are going to have a little fun with that. So naturally, I would recommend that. Richard, that's an old quote. Yeah, it's a good one. That's an old quote. I don't remember who was that. Gosh, I'm trying to think of his name. Not J.P. Morgan. One of those guys. Benjamin Graham, I think, said that. Yeah. I think whoever said that was the one that also said hope is the worst four-letter word you can use in the market. Yeah. Oh, Pavan, you watch the market over. I find myself doing the same thing. Same concept. Yeah. Monkeypox. I heard they changed the name of that. Are we calling it that still? Money guys never talk about dividends. Well, there you go. Another reason we're better than them. I pick on them just because we were trying to start a little rivalry there for a while. They didn't fall for it. They sent me a used coffee cup, man. One day I'll meet them. Give them a used coffee cup. Sounds like Ben. Yeah, I think it was him, man. Oh, Warren Buffett said that? Hope is not a strategy. Yeah, I remember that one. That's Warren Buffett there, but somebody a little more aggressive. Well, thank you for the comments there. Yeah, no closing beat tomorrow. Doing an anniversary dinner there. Might even get a haircut. I don't know. See how the day goes. It's about that time anyways. Those darn money guys. I'm sure they're nice guys. We just thought, hey, let's pick on somebody and have a little fun with them, and maybe they'll play games with us. And maybe they don't have the time. I don't know. They didn't want to play games. That's what you do. Okay. I'm going to get out of here. Remember, no closing beat tomorrow. I'll miss you guys. I really will. But there's something about a steak that'll make it all better, right? So I'm going to enjoy that. You guys enjoy the rest of your day. Thanks for hanging out with us, and subscribe and thumbs up and all that stuff that helps us out here. I don't even know what you're supposed to do anymore, but I appreciate it if you do it. You take a second to do it. Enjoy.